Hello guys, I want to welcome you once again to my channel. In my last video, I did make a promise that I was going to make a video on market structure. So today, I want to actually uh, make this video because I know how powerful understanding market structure affected my trading journey. It was such an eye-opener that it changed the game for me. It was a game changer because prior to when I understood what market structure really was, I I thought I was a structure trader. But when I got to get a clear understanding of market structure, it changed. It was a game changer. It really helped me in my trading journey. And in course of my conversations with the new and upcoming trader, I still see that they have that same struggle I was having when it came to understanding what market structure really is. Because just like the human body is made up of, we have a structure that determines our form, and what forms that structure is our skeleton. So market structure, understanding market structure really is important if you want to become a successful trader. If you want to be able to get your buys, this alarm is actually interrupting my video. So let me actually take it out. All right. So prior to when I actually got to learn about market structure, I thought I knew market structure, not until when I finally got the real understanding how to apply market structure to my trading. Now, market structure, we may have heard repeatedly or maybe read in books that the market moves in three different ways. That the market consolidates, the market trends upward and downward, and that the market also moves choppy in a choppy way. And we are always advised in our early journey as traders that we should avoid a choppy market, in a consolidating market that we can trade between the support and resistance. Price comes to support, you buy, take it to the resistance, you sell, and all of that. Those were things we were taught early in our trading journey. But we were also told that the best market to take advantage of is a market that is trending upward and downward. If it's going up, you buy. If it's coming down, you sell. Now, market structure uh, really helps you identify that market that is trending. Yeah, it helps you know the market that is trending, because except for persons who are not experienced, a trending market is your friend. Just like it is often said that a trend is your friend. And if you do not have the real understanding of market structure, then it becomes very, very difficult for you to actually be profitable when it comes to trading a trending market. Now, how does a trending market, how do you identify that a particular market is trending either upward or downward? So that is where market structure helps you. Now, for example, let us look at this pair that is right in front of the screen here. We have the AUD chef. The AUD chef is right in front of our screen here. But if we, what the first question that we want to ask is, what is this? What is this market doing? What is the structure of this market? Of course, we'll see that it is going downward. Yeah, it is a downward market. Now, fine. If you've been able to identify that it is a downward market, now how do you come in? How do you take advantage of the market? How do you know when to sell? How do you know? Because how do you know even when to buy? That is where market structure comes into play. Now, market structure for a market that is, when a market is trending downward, like what we are seeing in our screen here, a market that is trending downward, it will make an impulse, a pullback, then a continuation. A continuation. So a market that is trending downward. Here we have our high. We have our high here. We have a high. Change the color. There is a high. Then we have a low. Then the market made a retracement. Market made a retracement. So what is this retracement here? Becomes, because this retracement is lower than the high. So this is a lower high. Is a lower high. A lower high. A low, a lower high. But what validates or what makes this level a lower high is this level is not a valid lower high. not until price takes out this low. This is only a lower high when price takes out this low. So from at what point the did price take out this low? That's here. That's when price broke this level and formed a lower low. A lower low. Then after this lower low, we have another lower high. Why is it a lower high? Because it is lower a lower high. Why it is higher than this higher low? It is lower than this previous higher low. Then again, the market after this lower high here, price never did not take out this lower low here. So this is not a valid lower high until this level here. This is only a valid lower high when this lower low was formed. That's when price took out the last lower high. So a lower high, a lower low, then we had another lower low here, another lower high, sorry, here. Is it a valid lower high? Yes. Reason being that price took out the last low here. Price took out formed a lower low. Then after that, we saw that price took out the last lower high. So when the last lower high was taken out, that means a change in the market condition. When price took out the last lower high here, formed this high here. So price, the market changed from being a downward market to an upward market. Because instead of so if we pick our trend line, we should be able to connect the lower highs together. Should be able to connect our lower highs together. Our lower highs together. In most cases, our lower lows, our lower lows also. But since we are in a bearish market, what is really important is connecting the lower highs. We've also been able to connect our So this is a trending market. Now, how does this help you in your trading journey? How does it help? Understanding that in a downward market, for example, like we have here, that price forms lower highs and lower lows. Now, how does this help you? So as long as we that price is still below this level, you look for sales, except you are very much experienced that you can begin to look for buys even in the retracement, because you see price forming this from this high to this low, a retracement, then price dropped majorly. So the major moves are in the downward moves in the sales. So it retraced, dropped before price was finally the market sentiment changed. So at now understanding market structure, if you have been selling this market from this level, the moment price took out this last lower high here, so you also change your sentiment from selling to buying. So let's look for a buy example. Buy example here, not just here. We say price formed a low. There's a low. There's a low here. Then a high. A high. Then we have a higher low. And just like in the case of our lower high, this level is only regarded as a higher low when price broke the last high. When price broke the last high, that's when here becomes valid as a higher low. So we have a higher high, a higher high, a higher high here. Let's keep it here. Higher high when price broke and formed another higher low. Now this place is also valid. The important thing about uh, market structure, knowing what validates a higher low and a higher high, knowing what validates a higher low. So this place is only valid as a higher low because price produced a higher high. Yeah, price produced a higher high. Then still have another higher low here. Reason why it is uh, valid as a higher low is because price broke the last higher high to form another higher high. Now, after forming that higher high, price made a low here, but it is not a valid low Reason being that make a price did not break the last higher high. So because price did not break the last higher high, so this is not a valid higher low. And we saw what resulted after, because of inability of price to break the last higher high, price dropped aggressively downward. So if we had that full understanding of market structure, it will help us to know how to read the market correctly, especially uh, knowing how to trade a market that is trending. We want to be able to know what validates a higher high, what validates a higher low. So, like I mentioned in the example of both the downward and the upward, a higher low is only valid when it forms a higher high. When it forms a higher high, meaning for that to happen, it means it needs to break the previous high. It needs to break the previous high. So as long as it breaks the previous high, that's a higher high. So it now becomes a valid higher low. So same thing here, same here. Same here. Because we have a higher high here. But is this a higher low? No, because it didn't break the last higher high. So the same principle applied even when price was going lower. A higher low is only valid when a higher, a lower high, sorry, a lower high is only valid when it breaks the previous, when it breaks the lower low. So if it does not break the lower low, this is we had our high, our low. So this is only a lower high because price broke the last low to form a lower low. Same thing, this is only a lower high because price formed a lower low. This level is also a lower high because price formed a lower low. So after then, when the last lower high has been taken, we want to begin to look for change in the market structure. So just like we did in the downtrend, so you want to connect your lower highs together. So when you do that, that's your trend. That's your trend line. You see the market respecting that trend line. Though a break of the trend line does not mean that the trend has changed, as long as the lower high is still valid. So the trend only changed. So if price, listen up guys, this is key. If price had broken this trend line and this lower high here is still valid, or this lower high has not been taken out, price has not traded below this lower high, it does not signify change in the trend or the structure. If price stopped at this level, broke this trend line, stopped at this level, went up and took out this high, this the structure of the market is still very, very much intact. So a break of trend line does not mean a change in the structure of the market. So price can break a trend line and still the structure is still very, very much intact. Just understand what validates what validates a higher high or a higher low is when price breaks the previous high, it becomes valid as a higher high. Same with a lower high. So this we are understanding these uh, key points about structure actually changed was very very helpful in my trading. It actually helped when I'm looking at the structure of the market. It helped when it came to knowing when there will be a change in the structure of the market and when the trend is still intact. So guys, you want to watch this video repeatedly over and over again and be able to note these key points. If you note them, uh, it will really help you. So you want to go back. Just watching it once may not be enough. You want to go over and over and over again. And then when you have watched it over and over again, you want to, on your own, just like you saw me doing in the video, you want to begin to identify the lower highs and lower lows of this of the market. So if you do that repeatedly, you are training your eyes to be able to identify these key levels in the market. And when you do that, I'm very sure it is going to assist you. It's a fine piece that you can add to your trading journey. I'm not saying that just watching this video that explains market structure as lower, higher highs and higher lows when the market is moving upward, or lower lows and lower highs when the market is moving downward. At the market moment you're able to identify that your you are automatically a profitable trader. No, but it is a fine piece that you can add to your trading journey. It's very helpful. So guys, uh, I want to wrap up this video here, and I look forward to seeing you again in my next video when I will be doing the review of the setups that we looked at, or that I looked at during the weekend, during the weekly market outlook. So my next video, I'm going to review how they performed during the week. So thank you. See you guys very soon in my next video.